This was inevitable. Italy is now in a recession. Of course, we've seen this happen before. Italy is no stranger to recessions in the past, that's for sure. However, we have seen unprecedented levels of stimulus this time around, and still it hasn't been able to push Italy above water. Multiple banks have received a bailout, and the memories of 2008 are ignored across the ocean in the United States. Failure will come to all of those in debt. You came here for the truth, so let me unveil that for you. Today we're going to look at the situation in Italy. This has been a requested video from many of my subscribers who wanted to get into it. I'm not just going to show you what they've been giving you in the media. Yes, there's a recession. Yes, there's a contraction. I want to look on multiple levels here today. I'm going to give you the ins and outs. You're going to know what's happening in Italy right now, but it's going to be a jam-packed, hard-hitting episode, so sit back and relax. Let's begin. Beginning with the basics, Italy's economy falls into recession, quarter-on-quarter percentage growth. You can see the red line, that is Italy's GDP falling below into the negative territory, minus 0.2%. Euro area's GDP is positive 0.2%. The entire Eurozone is suffering today. When you look at it on a whole, it's not going to change, of course. Look at what happened during the Euro sovereign debt crisis, where you can see the contraction that took place. It was quite significant, but that changed. It came around again, and with all of the stimulus that they put into these markets, it was able to generate some temporary safety for countries like Italy, but it didn't last long. Now, we're going to get into some other issues, but first, just to show you the bar graph that basically depicts the same information going from 2001 up until the present, but I wanted to give you an idea here because I know that people learn in all different ways. You're looking at the EU 28 and the Euro area GDP growth rates percentage change over the previous year, and the reason I'm showing you this is simply because I want to give you the details right directly from the source. This happens to be the Eurostat website where you can get all these details. I brought this up for you so that you can just see it and how it is really looking at present. Italy's rulers have a serious problem. Italy's populist coalition government has a major problem. It's called recession. Apparently, they have a decade worth of stagnation and sluggish recovery. They had this new government put into place now, and they thought that this would be the reason why we would see a newfound boost, a newfound optimism. But of course, the markets began to sink. We've seen what's happening with the banking system. The debt is expanding, the deficits are getting worse, and it isn't really changing anything. People need to understand, number one, things do not change overnight, and number two, when you're talking about a government, it is never ever to benefit you. The whole point is to ensure that those in control and their friends all connected are happy, that their pockets are full, that the businesses they collude with are doing well. But people can't see that. Now, I don't know what's going to happen and what's going to come of this, but I can tell you that no matter where you turn, particularly in Europe, you're not going to find the positivity that is presented to you. There's going to be significant deflation in a time when we've seen massive levels of stimulus from the governments, from the central banks. There's no excuse for this at this point. When you look at the GDP, imagine that they can include illicit activity as part of their GDP figures, and somehow this is actually considered to be okay. The EU itself is the problem. If you get rid of that, you would unchain all of these countries, but that's a topic for a different day. Now, according to Bloomberg, the slowdown is part of a broader deceleration in the Eurozone, including Germany, the economic difficulties in China. There's other issues here. They get into them, and I think it's important to look at all different levels of a particular country. You want to go back in the history. You want to see what has happened. Banca Carige shows that Italy remains master of the bank bailout. When is a bailout not a bailout? When it's in Italy. Carige's woes have provided the first test of the resolve of Italy's populist government when it comes to potential bank failure. Of course, in this instance, it happened, and it happens in every government. First, they start talking about all the things that they see wrong with the situation, then they get put into power, and suddenly they're doing the same thing. Of course, there are always compromises that are made, ones that cross the line, but they still have to go for it. That's just the way it is. It's politics, all right? So they're talking about that with the bank bailouts that have happened, and of course, it's only going to get worse. There's going to be more pain and suffering as a result of this entire system itself. Italy has fallen into its third recession in a decade as slumping domestic demand caused the economy to shrink towards the bottom. Compared with the final quarter of 2017, Eurozone GDP rose by 1.2%, its weakest 12-month performance since the 2012-2013 recession that accompanied the sovereign debt crisis. Of course, this was expected to happen. In fact, it's much, much worse, but at least they're admitting that there's some problems today. Italy's national debt is among the highest in the Eurozone as a share of GDP, and it's the highest in cash terms. So obviously we have Greece at the top of the list, but just behind that is Italy. Not too far we see Portugal, and then we get to Belgium, France, and Spain. We are looking at over 100% of GDP for many countries right now, and this doesn't even include all of the unfunded liabilities. I'm sure just like in the US, they don't want to include that information because that's scary, that's frightening, and we don't want to see that. Now target 2 is interesting. You can look at the left-hand side, you can look at the right-hand side. On the left-hand side, you're seeing countries like Germany and Luxembourg. On the right-hand side, we're seeing Spain and Italy. Now, this is important because when you see this, those on the left, people owe money to them. Those on the right, people can't pay their bills. That's what you're seeing basically right now, where Germany is clearly, by far and large, the winner in this category. Italy not looking so good. Basically, €500 billion, which is quite the opposite of Germany, which is towards €1 trillion. And unfortunately, it's going to be a problem for these countries that are indebted, because those who are in debt will always suffer. We see that time and time again, how debt punishes these nations, these cities and states, and so on. You're looking at government debt in this chart right here. So there's basically two lines where you'll see 2007, that's on the left-hand side, and on the right-hand side, you're looking at 2017. And the numbers have increased dramatically. In fact, you can see Italy from 100% up to 132% in 2017. These numbers have increased, whether you look at Greece, 103% to 179%, Portugal, and so on. You could basically just go through the list if you're interested in that. Debt has increased, deficits have increased, and of course the solution has been to print money and to buy up corporate debt, to buy up assets, to buy up everything that they can. This hasn't resolved anything. We've seen the last time I showed you the ECB still printing money even after they said they wouldn't print any more money, but here we are because they know that deflation is kicking in and they've got a very big problem. They have to monetize their debt or they're going to be in big trouble, even worse than they are today. Public budgets of countries using the euro 2018 balances as a percentage of the GDP. On the left hand side, we are seeing Spain right here, 2.8. Then we have France and Italy at 2.0. That's their deficit. And there's a lot on the right hand side. For example, Cyprus, Germany, Luxembourg, they all have a surplus. Now each of these economies is a different size and it's not really measured in that way, but it's just giving you an idea of their public budgets. When you can see a country like, for example, Spain, they're really suffering with their banking system, and that can easily spread out to these other countries. Look at this. Risky Italy, total public debt, $2.2 trillion. That is the highest in Europe. Annual debt payment cost as a percentage of the GDP, 3.6%, the second highest in Europe. European Commission GDP growth forecast of 2018, 1.5%, and that's always higher than what they're willing to actually admit. That's the lowest in Europe. Bad loans inside Italy's banks, $286 billion, the highest in Europe. We have an issue right here that I think is central to what's happening in Italy today, and it doesn't get covered in the media. It's not being disclosed. It's not really being opened up to the public so that they can understand exactly what's going on. Non-performing loans are a very big problem. You're seeing that in Italy, even in India as well. We've got countries with major problems today. Their banking systems are a failure. There's no doubt about that. It's not just Italy or India or any others that I've mentioned. They're all doing the exact same thing, but we're not allowed to talk about it because people get offended. Almost as bad as the European debt crisis, a key measure of investor nervousness on Italy has spiked on concerns about politicians' plans. You could see this has been the worst since 2012. It's moving up into that territory. It'll probably get there. This is, by the way, Italy's 10-year yield on the Spain 10-year yield, comparing the two there. And obviously, this has been something to look at over the years for those who are interested. Foreign investors say ciao. Foreign investors continued dumping Italian bonds in June after a record sell-off in May. This has been a problem for them, obviously, because they need more money coming in to be able to fill that hole that's there right now. The ECB said, we're not going to do it anymore. They started to print less money to be funneled towards Italy, and then the Bank of Italy had to step in and actually engage in much of the activity that we have seen. The Italian economy is about a quarter larger than the Canadian economy. If its downturn persists, it could drag down the rest of the Eurozone, whose growth outlook was looking shaky even before it was known that Italy was sinking as fast as it is. And that really connects me in with my next article here out of Forbes. Italy has been all over the news lately, but it is not Europe's only problem. The big kahuna is Germany, which spent years offering generous vendor financing to the rest of the continent to entice the purchase of German goods. The result, a giant trade surplus for Germany and giant unpayable debts for those who bought German goods. Greece, for instance. But a lot of that debt is on the balance sheet of European banks. What if there are issues that unfold? The contagion here in Europe is mind-boggling when you break it down and understand which countries own different types of assets of the others. And you see how much contagion there really is, how much interconnectedness in a bad way there really is. If one country goes down, it will take all of the rest of them with it. The problems right now that we are seeing in Europe cannot be resolved while the EU is there. It is simply impossible. You could not get these countries to be with that currency, with that interest rate, and commanded by their overlords and still be able to resolve your issues. It is simply not possible. This happens to be the total return over the last 10 years, whether we're looking at that orange line, which is the S&P, and then everything at the bottom is European equities, Italy being the green line, minus 36.75%. Just above that is Spain, minus 20%, and you can see the rest for you there. Imagine that. You held on to something for 10 years and you returned nothing but negative values. That is worse than nothing. An Italian exit from the EU could require the biggest bank recapitalization ever. I just wanted you to think of what could possibly happen here when you start to have these bank failures. Look, it's happened before. We've had bank runs that have happened. We've had institutions that have failed. It does occur. Now, I'm not saying that people's deposits are going to be lost necessarily because people get scared. So I'm not going to say that. However, we could have systemic failure failures that occur in a domino effect from a small one to a medium-sized one to a large one, and suddenly it's engulfing the whole system, and most people are quite frankly not prepared whatsoever. Manufacturing conditions worsened in January to the greatest extent in almost 6 years, according to the PMI. That is very important to see that as well. We are looking at the statistics piling up here at this time. And then last but not least, just wanted to show you this here. It is out of CNN, and quite frankly they had a good article. It's brand new, or relatively new, January 28th. You could see the European debt crisis fast facts, and you could just go through and see all these significant dates and the things that have happened. So if you want to get a breakdown of exactly what has occurred in the timeline, check out this link right here. It will break it down for you, and that's all. I'll end the video there. If you found it informative, please give me a thumbs up. I'm trying to basically save you a whole load of time. That's what I do here at this channel. I make it easy for people to understand what is intentionally being used to make this information difficult when it really doesn't need to be. We just gotta cut through all the BS, and we need to get to the hard-hitting facts. So if you want to support me, hit that like button. Thank you very much. And last but not least, if you want the financial education that you were not taught in school, these 2 books have everything that you need. You can get them at Amazon. There's a link in the description. Of course, check that out. And if you want the audiobook, that's available at themoneygps.com.